Hi everyone, how are you all going this morning? I think we've got a couple on the line so far, but we'll just wait a couple more minutes until a couple other people come online. I think we've got about 10 joining us this morning. Not yet. Can you hear me on the line? We're just sort of waiting at the moment. Alright guys, I think we might get started because it's a little bit after 11:30 now, so we'll get started, and if anyone else joins us we can sort of loop back. Can everyone hear me alright? Grace, can you hear on the line, can you? Do you want to type into the box there or? Yep, fine, okay, excellent. Alright, let me just get this open. Okay, so welcome everyone to our second webinar in the Prospera webinar series. Today we're going to have a closer look at the accounts section. So last week we had a look at the navigation of the new Prospera. Today we're going to focus on accounts and the tracked accounts section inside of the client file. So I've got a very short PowerPoint presentation here, not death by slide. We've got two on the deck here, and then we're going to jump into Prospera and have a look at a couple of the accounts and creating an account and that sort of thing. So the very first thing is, I guess the question is, well, what is an account? And on the slide here, we've sort of outlined what an account is. It's the basic building block of a client strategy. So an account from a Prospera perspective is any savings or loan account, and that could be a private line of credit, it could be an investment line of credit, margin loans, savings accounts as well, so including offset accounts. And then at the very bottom there, we've got a special account called the surplus account, which we'll have more of a look at when we go and actually look at the accounts in a bit more detail. So the whole point of having the account section is obviously so that we can record the client's assets and liabilities and their loans. But it's really the basic building block of an actual strategy for the client. And there's two reasons for that. There's two components. The first part is that really helps us model what the expected movements are in the client's balances. So not only setting what those, initial settlement balances are for a client once we set them up and complete the model for them, but then also the second component is really tracking to those balances, those actual balances that we modelled initially, and tracking to them in terms of progress. So in today's session, we're going to have a look at the accounts themselves. We're not going to look at the tracked accounts and the implementing the client and then what the cash flow reports and those bits and pieces look like. We have a separate webinar that we'll cover that for later in the series. So today it's really just looking at the accounts, how they're set up and how they interact with each other, and then how you can actually model those in a client scenario from that perspective there. Okay, so let's jump into the accounts section here. So a bit the same as the client we looked at last week. So we've got Karen and Peter Accumulator, and what I've done is I've gone into their accounts section. So I've browsed into the client, having a look at the account section down the left-hand side, which gives me an account summary for this client. And so the section, as we spoke about last week, is broken up into a couple of different elements. At the very top here, I've got some warning messages, if there are any on the client file. And so the reason I've got some warning messages here is just around the actual tracking of the account for this client. So in this case here, I've got some accounts that aren't associated with my tracked accounts. We'll cover them in future webinars because it's really just making the connection between the account that we've got and actually the real life implemented account. Underneath that, we've got our existing accounts. So these are some of the accounts that I've already set up in the client file here. So we've got at the very top the surplus account, and we'll talk about that one in a moment. But then we've also got some of the other accounts here. So the primary line of credit, the investment line of credit, the margin loan, and a couple of other accounts there. And so we'll have a look at those in a bit more detail in a second. Below that, I've got conditional transfers. So this is the section that is set up based on any of the accounts that I've got, transferring balances between those accounts or transferring limits between those accounts on a conditional basis. And we'll have a look at that at the end of the webinar in this case here. So that's the accounts page. So a couple of things to note on this page. So I can click on any of the actual accounts, which will let me go in and edit those accounts, and we'll have a look at the primary line of credit in a second. I can also remove accounts as well. So if you look to the right-hand side of the account rows here, there's that little garbage bin there. That lets me remove those accounts. If I've created some accounts, so I need to remove them from the model as we move along. You've also got the Create New Accounts button in the bottom left-hand corner here. So if I wanted to create a new account that wasn't in the list here, that's how I'd go about creating that new account. So let's have a look at the primary line of credit first, and we can have a look at the structure inside of that. So on the account page here, so this is an existing account, so you can see that it is a primary line of credit, so the PLOC in the type field here. You'll notice that because this is an existing account, we've got a padlock on that row. So all that means is that when I set this account up, I set it up as a primary line of credit. So once I've set that account up, I can't actually change that because it is a PLOC in this case here. So it's locked to being a primary line of credit. The debt is private, so later on when we're looking at the tax implications of this account, it's treated as a private account. And it's also an interest-only account. So if I wanted to go and change that, and I actually wanted to make some changes to this account that were fundamentally locked like that, I would need to go and add a new account because I wouldn't be able to do that in this existing account section here. But all the other sections I can change here. So if for whatever reason I wanted to change the name, there's no padlock on this row, I could change the name to that account. I could change the ownership structure. So in this case here, my primary line of credit is a joint account, but I could change that between ownership structure there. And then importantly, the balance on the right here. So these are required fields. So the items that have got REQ after them are required data fields that I need to have included in there. So obviously the balance is one of those required fields, along with the interest rate as well on that one there. Let me just have a quick look here. We've got a comment. Is everyone else able to hear me on the line here? Okay. Yeah? Okay, just Grace who's having some trouble. Just bear with me for a second, guys. I'm just going to see if Grace is able to log into the phone chat. I'll just push on while we wait for that. Okay, so just returning to the account section again. So private line of credit, below that we've got the security. So in this case here, it is a secured loan, and we're securing this loan against our property assets. So we are going to cover the assets section in more detail in a future webinar, but suffice to say that if I've got an account or a loan, in this case, that's attached to my primary principal residence, I would list that here as secured to property. We can nominate that in future sections. Below that, we've got some fees. If there were annual fees attached to the account, we could pop those details in there. And then at the very bottom here, we start talking about, okay, well, where do we pay debt from? Where do we pay the interest, the debit interest from? So in this case, it's my primary line of credit. So we're just going to continue to pay the interest out of my primary line of credit. But when we have a look at the investment line of credit, you can see that we would actually nominate where we make that interest payment from. So we could actually nominate different accounts in the list here. So in this case here, we've got a whole host of different ones that we could select. At the bottom here, we've got an offset account, so we can nominate where the interest is coming from, but here we've got an offset account. So if we do have an offset account for whatever reason in this client scenario, and we do, when we go back to the account page, I'll show you that one. I could show you that that account was linked to that. So I think in this case here, we've got a $50,000 offset account for this client. So I can select that offset account here, and that will offset that against the loan balance that we've got up the top in this section here. So if you've got offsets, you can do that. If we look down the page a little bit further, so we've got conditional transfers. So if I'm moving limit or if I'm moving amounts between my primary line of credit and my investment line of credit, I can set what those amounts are. And I'll come back and I'll show you what they look like when we move through those in a little bit more detail. At the bottom here, we can set credit limits. So in this case here, my primary line of credit hasn't got a limit set on it at this point in time. To add a limit, I can click the add button here, and I can actually nominate a limit on that alone. So from February 2015, the credit limit will be whatever that credit limit might be, and then go update to include that. So over time, what I could do is I could actually move those credit limits on the loan. So by clicking add again, I could then put a future date in. So as we pay down our private debt, I could begin to change the credit limit down. So I could move that down to 400,000, and I could also index up my investment line of credit limit as we move along. So you can sort of get a bit of a feel for what that looks like. So that's the primary line of credit. Let's go and have a look at some of the differences, I guess, you can see the limit there, 500,000. So if we click on the investment line of credit for this client and have a look at this one, similar sorts of details again, but you can see here that we've got this account is set as an investment line of credit. It is an interest-only account, and it's also a joint as well. So you can see now, though, that this is not a private account. So this is a deductible loan because it's been set up initially as an investment line of credit. So we've got a balance of 205,000, and there's an interest rate here. We can see that. But you can see that the debit interest for this account is actually coming out of your primary line of credit. So when you set up those accounts, you can actually nominate where they come from. So you remember back to that previous account we just had a look at, the PLOC, that would have been coming from the PLOC account. But then in this case here, the investment line of credit is coming from the PLOC as well. And again, no credit limits set on this account in this particular detail. Let's go back to the account page. So you remember earlier in the session we looked at the fact that there would be a surplus account nominated here. So this is a special account that's set up when you create a new client. So the surplus account is a notional account, and what actually happens with that account is any cash flow surplus or deficit that the client has gets put into this account here, and then if it's a surplus or a deficit, then it gets separated out to those other accounts. So if we're allocating our surplus to paying down additional debt, that would then go from that surplus account, and it could go into your primary line of credit. But if you've got a deficit, then likewise we would also move that line of credit surplus or deficit rather into the deficit account as we move along. We mentioned earlier, so looking at the transfers at the bottom here, we mentioned earlier that so when you set up each of these accounts across the top here, and we've got quite a few, so we've got PLOC, ILOC, a margin loan, and a couple of other accounts there. As you create those, across the very bottom here, we've got conditional transfers. So what we can begin to do here is instead of actually nominating what those individual transfers are on those accounts as you move along, you can actually say across the bottom here, when my PLOC account balance is greater than 0 in this case here, we're transferring that across into my ILOC. And we can change that. So we can actually say not defined, so we don't want to do anything in that case there. But what I could do is I could actually nominate what that transfer would be. So if I want to actually build up a surplus or a buffer in my PLOC, and say that might be 10,000, I would then put 10,000 in there, and that would ensure that I maintain 10,000 in my PLOC, and then anything over that would then be transferred into my ILOC account, and that one there. So that's just an easier way of controlling your conditional transfers at the very bottom of the accounts page here, as opposed to having to go into each of those accounts individually to change those as we move along. Okay, so we've got any questions on that one there? So, I mean, again, very short 15-minute sort of session here on the accounts section. Hopefully that gives you a really good overview of, I guess, structuring your accounts, what the surplus account does, and how that interacts, and then also how you go about setting up and managing those existing accounts. Were there any questions on the line there, guys? Did anyone who's an existing user have any comments on using the accounts section, or some tips and tricks about what they might do when they're setting up a client's accounts or doing any modelling? No. Okay. Okay, well that's all we really wanted to cover today for the accounts section. So like last week, we're going to be doing a weekly webinar next week. So I think Next week, we'll probably be looking at the assets section, given that that's very closely linked to setting up the accounts. So you'll receive an invite that gets sent around by email this week. Like last week's session, we'll also be providing the recording for this online as well. So we'll send a post appointment, the post webinar email out to everyone so they can review that and watch that. And again, if you have any questions